The late payment of civil servants' salaries and a ban on imports on a variety of goods into Zimbabwe has sparked protest into the country, where President Robert Mugabe has been in power since 1987. Joining us in studio now to talk about the outlook for the Zimbabwean economy is Finweek editor Jana Marais. Jana, lovely to have you. It's been a while since you've been in studio with us and coming in and telling us about the outlook for Zimbabwe's economy. Maybe take us back. What exactly are the challenges that this particular country is facing at the moment?
I think the biggest challenge they're facing is that they've basically run out of cash. So the government is not in a position to pay civil servant salaries on time. I think even police and military payment, salaries have not been paid timeously. And I think that's why, for the first time, you've really seen ordinary Zimbabweans protest in a way that we haven't really seen before, where it's not organized by a political party or an opposition party or trade unions. It's really just ordinary Zimbabweans saying we're fed up with the way that the country is being run. The other thing is, of course, the import ban on goods, which has sparked a bit of a diplomatic row between South Africa and Zimbabwe. As much as more than 70% of Zimbabwe's economy is now informal. So this affects a lot of people's livelihoods because they can no longer make money out of cross-border trade, bringing in stuff from South Africa and selling it on that side.
There's been a lot of focus on, getting bailouts, and I think a lot of conditions need to be satisfied. And looking at the IMF, what would it take for, for some of these institutions to lift the ban on them funding a country like Zimbabwe?
Yes, so the IMF seems set to actually give Zimbabwe a bailout, and there's a lot of criticism about that as well. So basically, at the moment, Zimbabwe cannot access any funding from institutions like the World Bank because they're in debt. Their debt is in arrears to the tune of about $1 billion. And the IMF has basically said, well, if you promise to cut down on your government spending and to make sure that government procurement is more transparent, I think those are two of the key conditions that they're setting. We'll give you $1 billion to settle your arrears, and that would open up financing lines for Zimbabwe. The problem is that Zimbabwe has made promises about economic reform many times before, and critics say, how many times do you want to mislead the IMF before the IMF learns a lesson? And I think the other big concern is that people say, or economists say, Zimbabwe is lying about the real state of the economy, that it's actually in a much worse state, that the deficit is actually much bigger, that the economy is actually much smaller than they're saying it is. So there's a lot of pressure on the IMF to actually not approve a bailout for them. So it will be interesting to see if that goes ahead.
You're talking about economic reform and decisions that need to be made at a high level. We've got elections coming up in 2018. How is this going to change things? What do we need to be aware of?
Look, I think ZANU-PF is, from the looks of it, the opposition, the MDC, is really completely off the radar since the 2013 elections, which ZANU-PF won by a landslide. So at the moment, the ZANU-PF itself is very fragmented. There's obviously a big push for who's going to be in power following 2018, or should President Mugabe step down, or he's in his 90s, should he die? And I think that's part of the problem, is that the ruling, the government cannot actually come up with a uniform, straight plan to say this is what we want to do, because there's just simply so much infighting within the party itself. So it's a real mess.
Implications for investors. You're saying that there's been talk around whether or not the data that's coming out of Zimbabwe regarding its economic standpoint can be trusted. So from an investor's perspective, what does this mean? I
think it's a very difficult country, and it's quite depressing actually, because after 2009, when they abandoned the Zim dollar and switched really to the US dollar as their main currency, and we saw MDC and ZANU-PF in a power sharing agreement in government, there was actually a period, about 5 years, where the economy was really turning around, where you saw strong growth. And then since 2013, when ZANU-PF took power again, they've doubled the size of the civil service, which is why government can't pay. They've run out of money. And from an investor perspective, think about doing business in an economy where there's no cash. They've got limits of 300. Some banks have $300 a week that you can withdraw as a company. I mean, you cannot do business in those kind of scenarios. And then think if South African retailers doing business there who can't bring in goods from South Africa. I think it's really tough. And in the mining industry, which also affects a lot of South African listed companies, is the ZANU-PF has been very good at trying to get ever bigger slice of the pie in the mining industry, changing royalties, changing ownership rules, continuously, and that will continue. So I think there's a lot of risk. And I think it's a really tough place. I think companies who are already there will try and survive. They'll batten down their hatches. But I think new investors will certainly rather look elsewhere.
Yeah, exactly. Think twice before going into that particular market. Thank you so much for joining us. A very big thank you to Finweek editor Jana Marais. We'll be talking about uncertain times with regards to Zimbabwe, but globally it's certainly been a volatility and uncertainty too. Coming up, we'll be discussing how to ride out the rest of 2016. Stay with us.